Welcome to the weekly market update. My name is Ihab Jubil. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robot signals and website. Let's start the session. Here are the events that we will be looking at this week. Busy week. First tradable news will be tomorrow at 3:30 a.m. Australian RBA interest rate. All will be in London time. Wednesday 9:30 UK services PMI. At 1:15 p.m. US ADP non-farm payroll employment. At 3 p.m. US ISM non-manufacturing PMI. Thursday 12 p.m. UK Bank of England interest rate. On Friday at 12:30 a.m. Australian retail sales. At 1:30 p.m. Canada employment change. At 1:30 p.m. US non-farm payroll. Now, with the first event that we should look at this week. Australia interest rate decision that will be released on 2nd of February at 3:30 a.m. Australian interest rate decision tomorrow is forecasted that RBA should keep rates unchanged at 2%. In the highly unlikely scenario of a surprise, we should see plenty of market reactions. It's forecasted at 2% as previous release. How to trade this news? If RBA decides to cut interest rate by 25 basis points, we will make full option of the Australian dollar. If it cut the interest rate by 25 basis points, will make full options after the retracement. If RBA decides to hike rates back to 2.25%, we will make rise option at the Australian dollar as market is expecting an unchanged rate. Ultimately, we are a bit bearish on the Australian dollar as RBA has opened the door for rate cuts, and considering recent drop in crude prices, RBA definitely have room for rate cuts. So it's expected, it's forecasted at 2%, but we should watch this news if we get a deviation of 25 basis points in plus or in minus. If we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment and just follow the pre-news trend. Second news we will watch this week is UK services PMI that will be released on Wednesday at 9:30 a.m. UK Services Purchasing Manager Index could be another strong release out of of UK, with market paying close attention to news out of UK, determines the short-term direction of sterling. We should see plenty of market reactions if there is a surprise. It's forecasted at 55.4. Previous release was almost the same, 55.5. The services PMI is tradable with a minimum deviation of 2.5. 2.5 deviation. Deviation is the difference between the forecasted number and the actual release. So the forecast number is 55. We will see what's actual release. If the deviation is 2.5%, so it's our minimum deviation that can drive the market to its direction. So if we get 57.9 or better, we could see some demand in the pound, and we will consider making rise option on the pound against weaker currencies. If we get a 53 or lower, the pound could weaken, and we should look to make full option on the pound against stronger currencies. And how we will trade it? We will use the retracement trading method to trade this release. We will wait for the deviation, the 2.5 from the forecasted release, and then wait for the market to move with momentum first, and wait for a decent retracement before entering the market and buying the option. First, we will see the actual release if it hits the deviation number. So we will wait for the decent retracement before placing our trade. If we don't get the deviation number, as always, we should expect the market to just follow the pre-release market condition and sentiment for the pound before the release. If you trade in daily chart, you will see the trend in daily chart. Like in daily chart, as you can see in the chart in front of you, you can see there is downtrend. So if we don't get the deviation number, we will just simply make full option after the retracement. So in brief, we will make rise option at the pound at 58 or higher if we get this as actual release, and we will make full option if we get 53 or 52.9 as it's written in this screen. We will trade also US ADP release of non-farm employment change that will be released on Wednesday at 1:15 p.m. London time. US ATP non-farm employment change is usually a good release to trade. However, with risk sentiment now due to recent market turmoil, I would recommend to follow the trade plan carefully. The trade plan that I will tell you now. First, it's forecasted at 193,000. Previous release was pretty high, 257,000. So, if the deviation of 50,000, again, the deviation means the difference between actual release and expected number. expected number or forecasted number is 193,000. When the actual release, when the time comes to the actual release, we will see if it hits the deviation, the difference is 50,000. So if the deviation number is hit, the market probably will have good volatility, and it will be our chance to make our option trade. And this will change market perception for the non-farm payroll release on Friday. So we will be looking for a deviation of 50,000. If we get 243,000 or better, I would be looking to make rise option on the US dollar against a weak currency. So we will make rise option at 243 or higher, because like this it hits a deviation number 50,000. So 50,000 new jobs, the deviation number. If we get a 143,000 or worse, then I would be looking to make full option on the US dollar against a strong currency at this moment. So rise option at 243 or more, and full option at 143,000 or less. We will be trading this news based on after news retracement trading method. If we don't get the deviation number, expect the market to follow the pre-release market condition and sentiment. On Wednesday, we will also look to trade US ISM non-manufacturing PMI that will be released at 3 p.m. London time on Wednesday. US ISM non-manufacturing PMI is a leading indicator. And since the US services sector is the majority share of the labor force, a strong release should be positive for the dollar sentiment as traders anticipate a strong non-farm payroll. It's good chance for you to see the US ISM manufacturing PMI to expect if non-farm will get strong or weak or within expectations. It's forecasted at 55.1. Previous release was close 55.3. How to trade this news? US ISM non-manufacturing PMI is better known as the US Services PMI. In some countries, they just call it Services PMI. In US, they call it non-manufacturing PMI or US ISM manufacturing PMI. The current expectation is above the 50 at 55. This figure indicates an expansion. Any number above 50 is expansion. So we will be using a deviation of around 2.5 points in order to trade this release. So the deviation factor, the deviation number in this release is 2.5. In the event that 57.6, is reached, we should see some US dollar strength, and we should focus on trading against weaker currencies at this moment. If the opposite is true and a figure of 52.6 is released, the actual release, I expect to see weaker dollar, and we should trade with stronger currencies or against stronger currencies or to make full option at the US dollar. So full option at 52.6 or worse, rise option at 57.6 or better. As usual, we will be using the retracement trading method to trade this release. And if we don't get the deviation number, so if the actual release comes between 52.6 and 57.6, I expect the market just to follow the pre-release market trend. UK Bank of England interest rate will be released on Thursday at 12 p.m. London time. Bank of England interest rate decision will probably not surprise the market. Not surprise the market because recent comments by Kearney has been clear that the MPC will not hike rates, but we should watch this high impact news. In the extremely unlikely event, the Bank of England will hike rate to 0.75%. As you know, it's forecasted at 0.24 as the previous. So if Bank of England will hike rate to 0.75%, we will make price option a surprise increase to 400 billion or more in the APT. APT is quantitative easing in the UK, and the release of it at the same time with the interest rate release. So if we get increase to 400 billion or more in the APT, this release, this quantitative easing, if it will happen and they increase it to 400 billions, it will send a bearish signal to the market. And we should make full option on the pound, but only in short term, within the week. So if Bank of England hikes rate to 0.75, we will make definitely rise option. And it will be for long term, because most probably it will change direction of the pound. Second scenario is if we get a surprise increase in the quantitative easing, or what's called APT, to 400 billion, we will make full options, but for short term, with expiry of short term within days or within the end of the day, because pound in the short term it will affect the pound in short term, but it will also make further stimulus to help the pound in long run. So if you want to trade it immediately, make full option within day or 2 days. But if you missed it, or if you don't want to make it, if the release of 400 billions APT is the actual release, so wait for the pound to reach first support to make rise option. This is the second scenario. Australia retail sales will be released on Friday at 12:30 a.m. all London time. Australia retail sales release could change also the short-term direction of the Australian dollar. Australian dollar, after long run of downward trend, now start to recover, but we don't know for how long it will last, this recovery. So like this news, like Australia, like retail sales news, will help us to find the direction for the Australian dollar that will follow it in short term. It's forecasted at 0.5% near the previous release of 0.4%. How to trade this news? The deviation that we are looking for, this release for the Australia retail sales monthly release is minimum of 0.5%. So if we get a 1% or better, we will look to make rise option on the Australian dollar. If we get 0% or worse, in minus, we would look to make full option on the Australian dollar. There is a high probability of market movement with volatility in next 2 hours if we get our deviation. So you should make expiration of your trade, your option to 2 hours. In the event that we don't get our deviation, we will get number between 0 and 1%. We'll be trading. If we don't get the release, we will follow the pre-release market condition and sentiment as always. If we get more than 1% or less than 0%, we'll trade this news using after news retracement method. Last tradable news with us today that we will watch this week is U.S. non-farm payroll employment that will be released on Friday at 1:30 p.m. London time. It's expected to be around 192,000, and with the federal already regretting hiking rates last December, a sudden drop in the employment should cause further crack within the FOMC. They will regret it more, the hiking the rate. Top is also true, so then we should see strong demand for the dollar if we get good number. So non-farm payroll employment change release is forecasted at 192,000. The unemployment rate is expected to be at 5%. So if we get a significant lower release on the non-farm, less than 120,000, and a slightly higher unemployment rate, 5% or more, like the same rate or more, we will make full option on the dollar. So if we get lower release on the employment and an employment rate, we get it 5% or more, it means it's good it's bad news for the dollar, and we should make full option against a stronger currency. So 120 or less with an employment rate at 5% or more, we will make full option definitely. Especially because it means the federals will potentially delay the timing for the rate hike. On the other hand, if we get a strong non-farm payroll release, 262,000 or more, and the unemployment rate falls 5% or less, then the dollar will get stronger, and I would make rise option on the dollar against other weaker currencies. If we get a conflicting release between the non-farm payroll release and unemployment rate, wait and see how the market reacts first. If there is an overwhelming sentiment driving the market, we will get plenty of opportunities for an entry of your trade if we just wait for 5 or 10 minutes after the release. And always remember, if we don't get the deviation number, so if we get 5% as an employment rate and the number between 122,000 and 262,000, I expect the dollar to follow the pre-release trend. I want to remind you, if you missed the webinar or you want to watch again, you can watch it at binary.com YouTube channel. You can also find instant updates of the news at resource page at my website, ihabjubail.com. So then I'd like to thank you for attending today's webinar. We will hold following webinar soon. Goodbye and see you next time.